Hello, how do I do my daily chart analysis of large cap stocks for swing trading purposes? We have our watch list here and we can analyze 3 stocks from it this morning. So the first one we are going to analyze is FI. We have Thinkorswim platform open. We are going to analyze on maximum daily chart or analyze maximum daily chart for those stocks, and the first one is FI. So FI, we have 2 lines here, and at this point I could easily turn this one into a gray color, the default color, and just keep the purple one or the one that I highlighted to be the line that I would like to buy on. So when we are looking at FI, it reached that line, went below a little bit, and start going up. So at this point, because this is a line that we like to buy, that's just one of our long up to long swing trading strategy. We have the support lines passing by the bottom of the mountain. I like to call it the valley. It's uptrend line because we are trading upward large stocks or growth stocks. So we have those lines, and then you will choose where you want to buy, and once you buy, you will sell it when it reach a new high, because they do reach a new high. So this one is around where we want to buy, therefore we will pay close attention to it. So it has been there for a while, and by looking at it around this area to see if it start going up, I trace this line here, which is a little bit oblique. So meaning the drop here is higher than here, which is higher than here. Therefore there is, although this one is a green bar and technically the red bar will be the one to consider, and then I decided to buy future yesterday, and that's something I purchased. I don't really want to trade in my kids' account anymore. We tend to put money in their brokerage account, and then I will invest in the stock for them and sell and so forth. But now I'm teaching them to do them themselves. But our youngest one is not interested in it yet. So therefore, to keep investing for him, I decided to just put that in my husband and I's account, joint account, brokerage account, and the profits I will just move it to his account. That way I will pay tax on the profits, in our account anyway, because I do not want to keep trading in the account, and when they reach that 1100 or so, I had to file tax for them, because their unearned income might reach that threshold that they might file tax and pay tax at their parents' tax rates, or I will include their income in our tax return. So I just prefer to just give them a budget like $2,000 for them to trade in our brokerage account, and then I will move the profits to their brokerage account. So until I teach them how to file taxes, and then we can go from there. But at the same time, it allowed them for me to give them a capital to trade with, and then they can take the profits and I keep my capital. So instead of us every month putting some of our money in their brokerage account, I just prefer to put it in our brokerage account, and then they have a capital there to trade with and move them, and then they can get the profit. Does that make sense? You keep your capital and you give them the profits. So, but it's just a strategy that I thought about and I've been applying. And the two girls are doing a little bit, but the youngest one is not there yet, though I prefer to just do it for him for the time frame. So that was the reason why I bought this one here, although one of my kids is start getting it as well, but she has not purchased it yet. And I just purchased some share for him for the time being, and we'll see if he's really ready to start going up, or if it's going to continue going down. But yesterday the price went up. That's why we have a green bar there, and the price is highlighted in green, meaning the price at the end of the day was higher than the price in the morning when the markets open. But yeah, so by looking at what is going on here, there is an upward trend, depending on where you want to view it. Though if you want to take it from here, you still have a descent to consider. But if you want to touch the bottom of the chart, that's what I went from here. There is a growth here. But either way, I just feel like even if it continue to go down, it may not stay too far away from this line here. It might go a little bit down and continue, but again, it can continue to go down. Anything is like, if there is a lower area for a line there for it to go down to, it might try. So you just don't know. You just have to try your best. And that's why I just prefer to keep trading the same stocks over and over and over, so that I get to know them, instead of trying to trade a stocks that I never traded before every single day. But that's just a strategy of mine. So because this one we purchased it yesterday, and that's what I'm talking about it. So we are doing this analysis on the 10th of September after the market closed 9/9/2025. So, and now that this is purchased, we will compare where the price is to where we want to exit, which will be when it reach a new high. For that to be a new high, it has to be higher than the previous one. But until then, to buy it, we will be comparing where the price is to where we want to buy it. And that's what got us to keep checking what is going on there until we find a spot to enter. So the next one we are going to analyze is FICO. So by buying it, I highlight it there so that I know that I already purchased it. And the next one is FICO. Oh, and by the way, because that's something I could purchase for ourselves, but we do not have a lot of money in the account to buy more. So that's why I just prefer to tap into the money I allocated to the kids to just make that purchase for him. That way I can purchase a smaller dollar amount at least for him. So the next one is FICO. And FICO is highlighted because I purchased it already. So we are going to take a look at it. And right now, you can see we have two lines here. And what I like to do is when the chart is moving away from the line, we just keep extending the lines as well. So there is a line here that I highlighted that, well, if it goes there, I will buy. But I highlighted this one as well, that this is more likely to happen. So I will buy it there as well. So I will still keep those two lines highlighted as a buying point, entry point. So, but when it comes to FICO though, last year, 2024, we traded using shorts up to launching trading strategy, trading it on the upside wall of this mountain. I like to call this a mountain. You might call it a swing. then a down upswing, a downswing. I will call it a mountain, just make it easier for me to understand it and to explain it. And then, well, making profit along the way, but then we bought it there. Those arrows are arrows that I put on the chart to show where I bought it, and the one facing down shows where I sold it. So purchase it and sold it type of things. So we bought it again, and guess what? It was done going up and start working on the downside wall of the mountain, and we got trapped in it for since end of 2024. The year is on the x-axis here, or the dates, and then you have the price on the y-axis. So we got trapped in it. We didn't sell it at a loss. We still have it in the portfolio. It pulled back, went up, pulled back, and so forth. Crossed the line that we like to buy for the long option and swing trading strategy purposes, and went down and start going up. And then I decided, you know what, I'm going to buy more. That way I will lower the cost per unit that I have in the portfolio. So let's get a little bit closer to see what is going on here. There is two things that I took into consideration though. I put this line here to just show that well, it start going up, therefore I can enter that maybe it's down, going down, and start going up. And I purchased it some days ago, and you know, it's still going up right there. The second thing that I took into consideration is, well, if I bought it right there higher up, close to, you know, the peak of the mountain, and is close to the valley, it couldn't be any worse, right? So I could easily purchase it somewhere there. So that was the reason why when it pulled back and started going up here, I bought some more. But I have that confirmation that it started going up, but it could still decide to go down. You can see that when it was pulling down, it went up here and then still dropped down. So, but I just feel like, well, if I have it for what, almost a year in the red in the portfolio, buying it here is still better than here. So I mean, everything being equal, that, you know, it's not going to go bankrupt, it's going to go back up at some point. Buying it here is still lower than a lower price than here. Therefore, when you combine those two, buying it around the line here and here, if you combine those two, the cost per unit will be lower than just this by itself. In addition to that, if the number of share purchase here is low, because when I was doing this, I was using a smaller target amount per trade, and when now that I'm using a long option swing trading strategy, I'm using a larger amount. I'm purchasing more shares because I'm not buying it every day, I'm not selling every day. I'm allocating more share, more dollar amount per trade. But again, it's because I swing traded last year. I got familiarized with the concept, customized the strategy, and I was using around $2,000 per trade. And this year, I started with $5,000 per trade, and now if I have money in the account, I can even purchase 10,000. I can even spend $10,000 per trade. That's why I would say start small. Some years ago, it was just $100 we are using to buy penny stocks. So start small, one trade at a time. Depend on the price of the stocks, or small dollar amount like $100 per trade or so. And once you are making profits, you are getting comfortable trading, you can buy more share to increase the profits. So last year I traded often, allocating small dollar amount per trade, but this year I'm trading less often, allocating more dollar amount per trade, and I'm trading the same stocks pretty much. So I'm really familiar with those stocks, but buying it and then it goes down can happen. So I bought it there again, and that way I can cushion that fall or that cost. And now buying it here, I'll be comparing where the price is to where I like to sell it, which will be a new high. But when it reach a new high, then I will be comparing where how it happened previously. So this is a new high here, but when it reached it, it pulled back a little bit to start making the upside wall of the mountain and continue making a higher high along the way until it reached a peak and decided to be done with it and start going down to the valley. Therefore, when it reached that new high, I might decide not to sell it right away, but seeing if there is a chance it's going to continue making a higher highs for a while, and decided to stay in the trade for a little bit before I sell it. Now, all the way, because I don't know when that will end, but and knowing that it's going to make an upside wall of the mountain that is going to create, therefore there will be some slight drop along the way, and then it'll go up and so forth. So you will compare your exit point to what happened previously to see how that chart behave. If there's something that fall right back, then your best chance is to lock in that profit by selling it at the when it reach that new high. But if it's going to continue making a higher highs, then staying in a little bit might be an option. But again, the way my strategy to swing trade is to compare what happened before to see if there is a pattern there that I can rely on to make a decision, a buy decision or a sell decision. Like for instance, when it reached that area, it started going up. Therefore, it didn't really linger much there. And the same thing here. So I will assume when it reached it, it will start going up, which it did, but then pull back and start going. So, but yeah, so it's a strategy that is based on what happened before. And then to use as a formula or a pattern or so. So that's pretty much, that is the strategy that I use. So the last one we will analyze in this video is GD. So GD, well, we have, I don't know if this is a purchase here or if that just by mistake that arrow, you see when I have arrow line left there, it tends to put arrow almost everywhere on the chart if I'm not careful with the mouse. So I'm not going to consider this one, but there is this arrow here. So the chart went up, you can see this mountain here, and it went down. So when it was close to this entry point or support line or the valley, we have two though, but I just felt like there is a big chance that it's going to use this as a valley to rest and go up from there. So we purchased some shares there. Guess what? It pulled back on us to go a little bit below it, went up, pulled back to it again, went a little bit below it, move a little bit there, and then start going up, and it reached a new high. And I don't know when we bought it, right at the beginning of 2025, that will be January 28th. But then it reached a new high. Let's see, I think it started reaching that new high somewhere here in July. 7 months later or 6 months later, from January to July. But then I stayed in a little bit, it pulled back and start going up again, and I just decided to sell it. So, and then that's why we have that arrow facing down where we sold it. But yeah, so, and let's go back there. So from January to July, now to September, we sold it in September. When in July it start making, reach a new high. So, and that will be the profit. So without looking at the price, I actually pay for it where the arrow is 262 and this one is 327 or so. So you can see the difference. 300, let's just use 323, and here let's use 263. That's $60 per share. So depending on how many shares I purchase, you can do the math. So $60 per share, that's a good revenue, gross revenue, before you pay tax on it on there. And TradeSwap might charge few cents per trade. It does not charge when you buy, it charge when you sell, depending on how long you kept it before you sold it. But yeah, that is just, you know, an example of buying it at the valley line and selling it at the peak of the mountain. So thank you so much for your time. We thank you very much for watching our videos. We thank you for all your comments, and we thank you all that subscribe to our channel. I'm Afiavi Liberman, creator of Liberman Consulting L.L.C YouTube channel, and ninasoap.com, our blog. On our channel and on our blog, we share different ways to save money and different ways to make money to reach your financial independence, where you do not depend on an employer to provide for your family. And swing trading is one way to make money. Just start small, one share at a time, or allocate a small dollar amount per trade that you are comfortable with, so that you can practice the strategy you are using to the stocks you want to trade with it, to see if they complement each other, and keep adjusting your stock watch list until you have stocks that works well with the strategy you are using. And from that point, to make $2, you just double the number of shares you purchase. If you purchase one share, you make $1. You purchase 2 shares, you'll make $2, type of things. And you can see from this example, 1 share at 200 cc or so, cc3, we make $6 profit per share for keeping it for 6 months and selling it at 323, for instance. But it's because these particular stocks cost more than $100, but there are some stocks that cost less. And FI was around $100, and there was a stocks we analyzed yesterday that was less than $100, $40 a share or something like that. Keep in mind that the higher the price per share, the higher the profit per share is as well. The gap between it, like when they open in the morning and close in the evening, type of gap can be higher as well. And I'm not sure if here can show us, it's a little bit, I think like 136, 138. I'm trying to see, asking and buying there, but there can be, even though it does not fluctuate quickly, let's say in the morning it opened at 135, for instance, it closed the same day at 136. If I go to, that's $1 difference there. GD, for instance, which is $300, in the morning it opened at 321, in the evening, yeah, it pretty much, hold on, 321.84, 321.36. So it's like 6 cents difference. The other one, sense difference here, but I just want to point it out that, like, even in one day, the fluctuation between the morning price and the evening price can be more than $1, if that makes sense. That's pretty much what I wanted to point out there. 322, 325. That's what I wanted to point there. But just keep in mind that some days it can be this small gap between the two. Just to say that even though you're not buying it the same day and selling it the same day, just to say that even though those large caps don't fluctuate much for you to make a big money in it or lose a lot of money in it very quickly, a higher price per share, you can still make a good amount of profit. Hence the $60 per share profit for keeping it for 6 months. Thank you so much for your time.